So again, my name is Kathy Svetina, and my business is a fractional CFO business. So what that means that a lot of business owners struggle with understanding their financials. Like they get the reports from the accountants and from their bookkeeper, but they don't know how to use that to drive their business forward and what they can do to get it from point A to point B. So that is where I come in and I help them figure out the strategy for the business so that they can have a successful business in the future and, more money and all that good stuff. So without further ado, I would like to share my presentation. Just give me a second. And let me know if you can see it. Can you see it? Okay. So I want to talk to you about the problem that the most small businesses have, and that is that it's losing their money and it's putting them at high risk of failure. And that is the lack of financial planning. So like I said, as a fractional CFO, I see that a lot with business owners that they skip it because they either don't know how to do it or they just don't see the value of it. They don't understand what it goes into it. So I don't want you to be one of those people. And what I want to do in this presentation, I want to do three things. I want to cover what exactly is financial planning and why you should even bother with it in the first place, why it matters. And I also want to give you a couple of helpful tips on how to do it and some resources that are going to help you do this. So what exactly is financial planning, right? So when you think about your business, there are 2 points. It's always where you are right now and where you want to be. So point A is where you are right now. Point B is where you want to be. These are your goals. Where do you see yourself in, 3 months from now, 6 months from now, maybe even 3 years or 5 years from now? And where planning comes in, it helps you identify two things. So it helps you identify the point B, which is the visions and the goals for the future in a very clear and distinct way. And also it helps you figure out how to get there, which is that road, right? How to get from point A to point B. So financial planning is this tool that gives you a clear map and a roadmap of how to get there. And there are two types of financial planning. So one is that you're probably familiar with as a short term, which are your yearly budgets and the quarterly projections and forecasts. And it's more detailed in nature. And the second one is the long term, which is more strategic. It is a lot more higher level. And one of the things that you can do with that is do the 3 to 5 year plans. So where do you see your business in 3 years, in 5 years? So why does this matter and why you should even bother doing this, right? So one thing that you might think to yourself is, why do I have to have a plan in the first place? Why can't I just go and figure this out as I go, right? And the question, if you want to have a successful business, just simply reviewing the historical financial statements that you're getting it from your accountant and from your bookkeeper is just not enough. So you have to be proactive about your finances. So, and when you're proactive about it, that means you're not doing any guesswork, you're not flying blindly, you're making a lot better decisions, which essentially you're going to make more money. And you make more money because you're going to be maximizing your resources and you're going to be using them wisely. So I like to give this analogy of, if you think of your business as a house, right? So your bookkeeping and your accounting is your foundation. That is your basement that the house is standing on. But the financial planning is your roof. And what is the job of a roof? The job of a roof is to cover you and to protect you when there's snow, when there's rain, so that you don't get exposed to all these elements, right? So I know a lot of you might also think, you can't predict the future. The thing, how things are going right now, who knows what's going to happen in 3-4 months down the road? We just don't know. But the goal of the financial planning is not to predict the future. This is not an exercise in fortune telling, right? Because essentially no one really knows what's going to happen in the future 100%. So the goal of this is to really identify the problems before they happen. So if you remember that roadmap that I showed a couple slides ago, if I use that analogy, is you want to know where the holes are in that road so that you don't fall into them. So you want to know that before. You also want to identify the opportunities so that you can use them to your advantage. So when you identify the problems and opportunities, that means that you can actually prepare better, right? So when you might not be able to completely avoid the problems, but you can actually minimize them. So you can't avoid the holes in the road, but you can actually make them a lot more shallow and make them as shallow as possible. And on the other side, you also want to go and maximize those opportunities as well. So when you identify and you prepare, that will give you a much greater chance of actually succeeding, so that you can have a successful business and make more money in at the end. So you might say, I understand this is really important, but it sounds super complicated, right? How do I do this? Where do I start? Where do I go? What should I really do? And I want to give you a couple of helpful tips of how to plan, especially when it comes to that short-term planning for next year for your budget. And if you haven't done that so far, this is really going to help you. So it really doesn't have to be complicated. I have a simple plan for basic planning. It's going to give you a good foundation. It has three things. So we want to do planning for 3 items. You want to do it twice a year, and there are 3 steps that you have to do when you do this planning. So in the following slides, I'm going to walk you through all of these. So let's start with the first one. What are the 3 things that you should be doing, right? The 3 things that you should be planning for are your sales and your revenue, your expenses, and you're going to be able to find those on your income statement or your profit and loss statement, the P&L statement. And the third thing is your cash flow, your cash, which is your cash in and your cash out. The important thing to remember here is that your cash is actually different from your revenue, from your sales, and from your expenses. And the best way to describe this and what the difference is, for example, if you just sign, let's say you're a web designer, right? And you just sign a new client for $10,000. And you know that you're not going to get those $10,000 right up front. You're going to actually get them in installments based on how much work you've done. So in the first, you might get the $3,000 just to start the kickoff of the project, and then you get the $3,000 in the middle of the project, and at the end you get another $4,000. So for that particular client, your sales are going to be $10,000, but you're not going to get that immediately. So you want to go and plan that ahead over how many months. Let's say it's going to take you 3 months to complete the project, that your cash is actually going to go out, and you want to include that in your projections. On the other hand, if you were a client and you're actually paying the web designer, you are not going to get an immediate $10,000 in cash out either. So when you're projecting your expenses, you're going to do that in phases, however, how long it's going to take them. So like I said, important here is to know that your cash is different from your expenses and from your revenue. So when should you be doing that? And I like to keep things as simple and follow what I call it, cues from nature. So if you think about it, spring is for planting new seeds that will grow in time. So you want to use that time for your long-term planning. That's the time to do your long-term plan, the 3 to 5 years plans. It's very strategic. And the nice thing about this is that it's also going to give you a foundation for your planning in the fall. And you want to do that between like March and May, so that you're constantly reviewing your visions for the business. You're being very strategic of where you want your business to go and where you want to be. And fall is for preparing, right? You think about squirrels, how they're taking nuts and they're preparing them and putting them in the ground to, prepare themselves for the winter. So this is very short term. It should be for the next year's budget for 1 year, and it's detailed. And the nice thing about it too is because you're going to be preparing. It will also give you a nice foundation for the spring planning as well. So the third thing I want to talk about is how do you actually do it, right? And I'm going to go into each of these steps in detail. And the first thing is to start with the data that you have. You would go and revise with what you know has changed. And the third step is to define and include your goals. So you're kind of taking the bottom up approach to it, right? So when you start with the data that you have, you will get as much historical data about your business as you have historical financial data. And you would get that from your accounting software. You either use QuickBooks or Xero or whatever accounting software you use, and any other programs that you might be using, such as Shopify if you're an e-commerce person. The other thing you would also want to get is the contract information. And that's important for your cash flow. Again, you want to know the start and the end date of those contracts, and what the payment schedule is to you. Or if you have a contract with someone else, like if you have a contractor, you want to know when exactly you're obligated to pay them. So the idea is that you would get this information for the last 2 to 3 years to make sure that you're not missing anything. So gather as much data as you can. And that is going to be your starting point, right? So once you have that foundation, then you move into any changes. So you revise with what has changed. You might have some new information that is not reflected in your financials, such as any new products or services that you started offering, or that the new contracts that you won or you lost, but you haven't really seen the impact of it in your financials yet. Any expenses that you added or cut. So you want to make a list of all of them, and you include them in that as well. So the third thing is you want to define and include your goals. So that is your point B on that roadmap, right? You want to set the goals for your business and put the numbers for the goals. So I have an example here. If you were to start a new product or a line service that you will offer, and there are 4 things that you want to go and think about when you do this exercise. First is obviously the start of the offering. Then how much you want to price it, and how much do you think you're going to sell. So those 2 items actually become your sales numbers. So you have the quantity times the price becomes your sale number. And then any other expenses that are associated with new offer. And you also keep in mind that you might see expenses before you actually see any sales. So you might be ramping up that new offer. You see the sales, 2-3 months down the line, but you're going to have all those expenses before. So you want to make sure that you reflect that in your plan to see if you have any shortages before it actually happens. So one thing I also want to make sure that that I have it across is, like I said, this doesn't have to be complicated, right? You can do this in Google Spreadsheet. You can do this in Excel. I mean, I worked for multi-billion-dollar companies, and we used Excel spreadsheets. So if it was good enough for them, it works for other businesses as well. So you want to also round the numbers, make it easier on yourself. This is not a exact numbers exercise here. So you don't have to go 3,475, just round it up to 3,500. And also it is not set in stone. So the plans that you come up with, these are your living, breathing document. And you can always change it later, right? So when you go through the exercise of the budget and you see that something's really starting to change 3 months, 4 months down the road, you revise it, and that actually becomes your forecast, your new baseline to go and compare it against. So you've gone through all this exercise, now what? What do you do with this information? So you have this value information that you can use. You should be using it. So when you when you've gone through all this, you probably will see a couple of patterns, and this always happens. So you might see a couple of issues down the road, and one thing you should start asking yourself is like, how do I prepare myself for this, right? What needs to happen? What do I need to do right now? Um, did you find out that you need to change the direction? Did you find out any opportunities that might actually make you money or save you money? And the other thing that you want to do with this, you also want to track your actual performance against this so that you can adjust it as needed. And this is where the forecast comes in, like I just discussed it in the previous slide. So I also want to give you a couple of resources, which I think are really helpful when you go through this exercise. And one of them is a really good software. So if you have accounting software such as Zero or or QuickBooks, um, and you're trying to figure out where your cash is going to be, Float is a really great software to use for that. You don't need to manually figure it out. You put your budget in, and you can actually play with a lot of what we call scenarios, which are the what if questions. So, for example, if you know your sales go down, what is going to happen with your profit? What's going to happen with your you know, with certain expenses? And it's a really great tool to actually use that so that you don't have to go and manually do it in Excel. And the other book that I absolutely love, it's called Accounting for the Number Phobic, and it's a great title. It's it actually tells you like how to look at your numbers, what are some of the how to interpret them, what do the statements actually mean, how does everything flow together, and it actually gives you some good strategies too when you think about your finances as well, like especially in the pricing arena or how to look at it in the cash flow. I highly recommend this resource. So where can you find me? If you have any questions, I'm on LinkedIn. I encourage you to follow me. I post a lot of helpful information for small businesses, how to actually do all of this, how to do the financial strategy, how to get the insights from your finances. And if you have any, you know, questions, you can always email me. You can look at my website. I'll be happy to walk you through it too. I actually offer a couple of services. One is the financial health check, where we go through your weaknesses and your strengths in your finances, what you should be looking at. And if you do need help when you go through all this, I also offer packages when I do project-based work so that you have someone to walk you through this if you know you feel like you're overwhelmed to do it on your own. So I encourage you to follow me on LinkedIn and follow with my contact.